How to Invest by Lifewell. For many people, investing is a scary thing. You work hours for a paycheck, and now you're supposed to just put that money into a stock market? Seems risky. The goal of this video is to simplify as much as possible how to start investing so that anyone can begin building wealth, regardless of their background, age, education, or income. To begin, you must evaluate your current situation. There are 3 things you need to identify. Do you have debt? What is your income? And do you have savings? Before investing, it is responsible to eliminate all bad debt first. Sometimes this could take years, so do not feel the need to completely pay off the debt in full before you begin your investing journey. Next, figure out your monthly take-home pay and decide what percentage can go towards your investments every month. Lastly, if you have savings, reconsider moving them from a savings account to a brokerage or investment account. It is smart to keep 3 to 6 months of monthly expenses on hand in cash in case of an emergency. The remainder can be invested. To become a successful investor, you must understand the relationship between time and money. The two are naturally intertwined. Reflect on what you would do if you had more time. Money is the tool to buy yourself the freedom of time. Keep in mind, the fruits of your labor will be rotten if you do not have the time, energy, or people to enjoy them with. Identify what makes you happy and use it as your foundation as you experience financial gains. As with many things, when investing, consistency is key. Any successful athlete or business person will tell you the same thing. Once you identify how much of your income you can set aside for investing, do so repeatedly. Treat your investment accounts as your savings accounts and keep contributing over time. Even if your investments are going down at the moment, it is good to consistently contribute. Eventually, you may see a dollar figure in your account and immediately think what you could buy with all that money. Don't. It is hard to be a successful investor if you are also an impulsive spender. The key to building wealth is having some wealth to start off with. Remember, this is your savings. Think of your money as a percentage. Would you rather earn 10% interest on $100 or $1 million? By thinking in percentages, being patient with your money will become more natural. Say you hit a financial goal. You could save to buy a house, a car, or a trip around the world. The balance of deciding when to spend is unique to every individual. Just remember, that happiness you envision years from now with all that money is just a dream. Live life for today and invest for tomorrow. Buy yourself that freedom to choose what you would like to do tomorrow. You may be asking yourself, why is investing so important and why should I start now? Terms like compound interest may ring a bell, which highlight the benefits of starting early. But even a subtler and more powerful force at hand is a thing called inflation. Every day, the value of the dollar very slightly declines. This becomes much more noticeable over longer periods of time. Remember the $5 footlong from Subway? Now it's the $5 footlong when you order 2 for a limited time only. Otherwise, pay more than $5. Gas used to cost $1 a gallon. College tuition at a public university was $400 a year in 1970. Now, it averages $10,000 a year and $32,000 a year for a private school. Imagine working 50 years in Venezuela just to see your lifelong earnings vaporize as the Venezuelan dollar, called the bolivar, is now essentially worthless. Inflation is sloppy, and that is why cryptocurrencies like Bitcoin have gained traction. Designed to be a deflationary asset with a finite supply. The United States has printed a lot of money recently, and the effects of inflation are catching up. It is good to find solid investments to store your cash so that your money does not lose its value, but gains value instead. So now that you've gotten this far, what do you do to actually get started? First, you're going to want to select a brokerage. I recommend using Vanguard or Fidelity to get started. If you choose to use an app like Robinhood, be aware of the risks. Recent events have shown that brokerages like Robinhood may have dual motives, as well as not provide you true ownership of the assets you purchase. Next, start slow. Investing is not a race or a quick get-rich scheme. If $100 is a lot for you, start with just $50. Take your time to get accustomed to how things work without the financial risk. Focus on the process first, and then scale upwards. Invest in innovation. It is good to invest into companies that are actively changing the world and producing value. Take, for example, Tesla, Apple, and Google. Lastly, be patient. Not every day will be a good day. Sometimes entire years are bad years. Investing is a lifelong journey. As with every journey, it is helpful to have a guide. And that's what we at Lifewell are here for. Lifewell's mission is to help reduce wealth inequality by making it easy for anyone to begin investing. Next, we will discuss more in detail the investing process.